Hello, everybody, and welcome in to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm joined by Doomberg, the author of the Doomberg Substack, the #1 paid finance newsletter on that platform, where he writes about energy analysis with a refreshingly honest twist. We're going to discuss why the EU is considering buying even more hydrocarbons from Russia, despite their sanctions and virtue signaling, the recent election results in Germany, and if they could lead to the return of nuclear energy to the country, the shifting geopolitical alliances being driven by the Trump administration and how they could impact the world, and so much more. I hope you'll enjoy today's conversation with Doomberg. Doomberg, it is great to have you back on the show. Always enjoy our discussions. Last time I had you on, you said the EU really needed to come to an arrangement with Russia regarding energy supplies, or they would face a crisis. Since then, this has become a topic of discussion amongst EU leaders. Just a week ago, The Economist published an article titled, "Will Europe Return to Putin's Gas? A Deal with the Devil would boost the continent's miserable economy." It should be noted that the EU is already purchasing energy from Russia, despite sanctions and virtue signaling. In fact, The Guardian recently pointed out they spent more on Russian hydrocarbons than on the war effort in Ukraine during that same time frame. So some hypocrisy certainly going on here. Give us your current thoughts on how this whole scenario is playing out.
I was interested to read that. We had just finished our Doom Zoom presentation on the natural gas pipeline situation between Russia and Europe, because at the end of the year, famously, Ukraine refused to renew a transit agreement with Russia, and that cut off natural gas that was going through Ukraine and onto countries like Hungary and Slovakia. And this has forced really high volumes of gas through the one major remaining artery, at least over land, which is through Turkey. And then, of course, this has forced Europe to become reliant on LNG, liquefied natural gas. And really, once LNG gets on the water, it doesn't really matter where it came from. That's kind of a global market. And so, yes, technically, a lot of Russian LNG is ending up in Europe, and they're paying much higher prices for it. You just can't compare the cost of pipeline gas produced over land, produced and shipped over land, than the cost of liquefying and putting it on a giant LNG cargo ship and floating it all over the oceans and then regasifying it wherever it's supposed to go. You've got a lot of capital to pay in between such destinations. And I must say, as logical as such a rapprochement would seem, the current slate of leaders in Europe seem to be exceptionally stubborn on the issue. None of them are particularly popular. And yet, even as Trump is loudly angling for an end to the war and a return to some form of business and normal relationships with Russia, the European leaders are doubling and tripling down on their insanity. The UK in particular is in a crisis. Europe is in a crisis. And frankly, the result of the last German election only solidifies the radically incompetent slate of leadership that country has. And so ultimately, I don't know what the path out is. And by the way, that the embedded in that question is an assumption that the Russians want to trade energy with Europe again going forward. And that's a big if. Look, Gazprom has been the subject of an enormous amount of lawfare. And the Russians have kind of had it. We opened that pro-tier presentation in January with an amazing quote from Putin. And by the way, one of the things that happens in the West is nobody actually listens to what Putin says, which is kind of amazing. You could understand where the Russians are going by simply reading the newspaper or watching a few videos of the man. He said, "You have made your bed, now lie in it. Live without our gas." I think the Russians are kind of fed up with Europe in particular. They might strike a deal with the U.S. because the U.S. is still a superpower. And I suspect there'll be a three-way deal between the U.S., China, and Russia before long. But Europe is on its own. Wind turbines and solar panels, as far as the eye can see, inexpensive LNG, complete deindustrialization of their industry, political unrest that leads to significant changes in voting that leads to no changes in governance. This is not a recipe for optimism going forward.
Well, you brought up the German elections there. I'd like to pick your brain regarding how that went. Is there any silver lining in that the AfD I mean, I guess it depends on your outlook on how the election should have gone and how real change could actually come about in a positive way for Germany. A lot of people pointing to the AfD as, Elon Musk making statements like they're the only way to save Germany, etc. Is there any silver lining in those election results? And could there be a shift back towards nuclear energy as a result of this? Because I know the CDU has talked about turning the nukes back on, I believe, in the past. Correct me if I'm wrong there. Could that come to pass, do you think?
I think we are another election cycle and another major crisis away from meaningful change. I think the headline of the election is change nothing. You could follow far better chroniclers of German politics than us. We watch it carefully, of course, but at its core, there's this crazy desire to not have anything pass, their legislative body with the help of votes from the Alternative for Germany. And so you're going to have a very, very weak, barely a majority government, presuming that the CDU and Olaf Scholz's party can get together and form such a coalition. And the prospects aren't good because they need, it's a razor-thin majority. Many of the potential coalition partners are opposed to a restart of nuclear. So for them to restart nuclear, which, by the way, is dead in the middle of the campaign promises that the Alternative for Germany has made, you're going to need votes from the Alternative for Germany to get that done. And there's this, it's verboten to do such things for some crazy reason. The natural ruling party that should result from these elections is a coalition between the CDU and the Alternative for Germany. That's what the voters want. But for a variety of reasons, the Germans have been soaked in propaganda like you wouldn't believe. And so the voters will not get what they want. And in particular, voters in East Germany express significant frustration. And we ponder internally whether, German reunification is permanent and irreversible. I mean, at some point, there's such a vast chasm between East and West Germany that I don't know how sustainable it is. So we'll see. My view is nothing will change. The crisis will get worse. The U.S. is pulling out of Europe. Trump might even pull out of NATO. And Europe will have to fend for itself after having annoyed or gone to war with Russia, China, India, and the U.S. So I don't know who's running Europe, but they certainly aren't doing a very good job of it.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Yes, that's definitely putting it lightly. Now, you brought up Trump's move to kind of try to end the war, bring that to a close, and the resistance he's faced from the EU. It appears now that the EU and the US are at odds, particularly after J.D. Vance went and lectured them about free speech, and the Trump administration left them and Ukraine as well out of the peace talks with Russia. Are we experiencing a geopolitical sea change here? And how do you expect this potential realignment of alliances to impact the world at large?
So the short answer is yes, although I want to make one correction. They weren't peace talks. They were bilateral normalization talks between Russia and China, and we should applaud those. As Putin himself said, anybody in Europe can pick up the phone or travel to Moscow anytime they want and engage in talks with Russia. And the same holds true for Ukraine, although Ukraine has this directive that no official can negotiate with Russia while Putin is still in power, which would need to be rescinded, it seems. But there's nothing holding back Macron or Starmer from getting on a plane and flying to Moscow. I'm sure they would be received, and they would have all the meetings with Putin and Sergei Lavrov that they would want. And so Trump is a businessman. Trump campaigned on ending the war. Trump, I believe, correctly says that the war would not have started if he had remained president. He has no tolerance for the war. He seems to have very little tolerance for Zelensky. But most importantly, and I think this is a thread of history that people are forgetting, really what's going on is a war between the US and Britain. And in particular, Trump and the MAGA team and the Labour Party of Britain. The British intelligence, widely believed now, was behind the Russiagate hoax, and that's what it was. It was a hoax. The Steele dossier, Cambridge, all of that stuff came out of the UK. The UK does not like Trump, didn't want Trump to win in 2016, tried to torpedo his presidency, tried to help Biden win in 2020, and Labour literally sent 100 operatives over to the US to campaign for Kamala Harris in the last campaign, and well, Trump won. And so I think we're seeing, it's characterized, at least, from the Churchill days, as the unbreakable bond. I think the bond is well and fully broken. And in a way, I think Trump's needling of Canada and the 51st state and Governor Trudeau is really directed at the UK, who views Canada as still as part of its informal empire. And we're seeing a crack up between London and Washington, the likes of which we have not seen for decades. And I think it will have massive geopolitical consequences. Trump is walking away from Europe. He's walking away from the war. He's focusing in the Western Hemisphere, and he wants to cut a big, giant deal with Russia and China. I think that's what's going on.
I want to hone in on the economic situation in the U.S. specifically, because I have a lineup down the block of guests that come on this show pounding the table that the U.S. economy is in real trouble here. When it gets to the extremes, when you have really serious gold bugs, for example, who believe the dollar is set to collapse any day now, you've heard all of that hyperbole before. You're taking a bit of a contrary view because you recently wrote an article on your Substack titled "The U.S. is not broke." Here's a quote from it. "Contrary to the constant alarmism about America's irreversible slide into insolvency, the country is far from broke and Trump has considerable flexibility at his disposal." Walk us through what you're seeing there. And do you see more strength ahead in the U.S. economy, or do you simply see it as a neutral situation where you don't expect to collapse, but things are not necessarily going to advance?
So we should separate the two questions because they're different. The current state of the U.S. economy is a separate analysis from, is the U.S. broke? And the point of our piece is the U.S. has a lot of debt, and the U.S. is running a large deficit, and the U.S. is debasing its currency. All those things are true, which is why we're long gold. But that doesn't mean the country is broke. First of all, the country took in tax receipts last year the same amount that it spent in 2019. In other words, just 5 years ago, the amount we took in taxes, I live in the US, would have balanced the budget of 2019. Do you think the government of 2019 was lean and had no fat in it and had no fraud in it? Of course not. It was a bloated mess back then, and it's only gotten much, much worse since COVID. So in rough numbers, we spent 6.5 trillion and took in 4.9 trillion in the last fiscal year. Okay. If we did an honest zero-based budgeting exercise, which we talked about in the piece, which happens in the private sector all the time, you could cut government spending in half and you and I wouldn't even notice it. There's an enormous amount of waste and fraud and mismanagement. Something like a 25% cut to the current baseline would balance the budget. Now, Doge is trying to do that, and Elon Musk is probably the right guy for the job. Lord knows he's probably good at spotting fraud, for example. But also, I think you need sort of a maniacal, unempathetic, cold-blooded approach to these things. As we mentioned in the piece, when companies get in distress, there's all manner of well-known tools that can be used. Experts jump into place, and you could cut the federal government budget by a third tomorrow. There would be a recession, by the way, that would trigger a recession. And that's the biggest counter-argument we got to our piece. Well, if you did that, it would trigger a recession. Sure, let's walk through the math. Tell the world you're going to balance the budget. Take a chainsaw to it. A bunch of people get unemployed. They have to retool. We have a recession. The deficit grows a little bit. And the Fed announces it's going to sterilize temporarily the debt, monetize it basically until we come out of the recession. And when we come out of that recession, we have far less regulatory burden. We still have a boom in energy. We're swimming in dirt cheap hydrocarbons, and we see economic growth on the back end of such cuts. And now the Fed doesn't have to monetize near as much. What do you think happens to interest rates in that scenario? They come down because the world no longer thinks that Washington, D.C. is a swamp of fraud and waste. Beyond that, the U.S. has an enormous amount of assets that just aren't listed on the balance sheet. Gold is not properly valued on the balance sheet. It's valued at $42.22, as opposed to its current trading price of almost 3,000 an ounce. That's 700 billion in value right there. The federal government owns 620 or 30 million acres of often pristine land. It has billions of acres of offshore assets that it could develop or sell or lease. And by the way, all you really need to do is revalue the gold, which is a form of debasement. But at $25,000 gold, the U.S. doesn't have much of a hole to plug anymore. So, I think Scott Bessent, the Treasury Secretary, is a very skilled individual, comes from the finance world, understands the problems of the Treasury very well, was writing about it prolifically in his investor letters. And so I think with a little outside help from people who've done it before, you could balance the budget. There'd be a lot of upset people. We're seeing a lot of upset people. By the way, what a great political thing for Trump to run on day after day. Release the fraud, expose the fraud, hear the Democrats complain about it, and laugh at them. I mean, it's a totally losing strategy for the Democrats to defend what we've seen already in the first month and change since Trump has been president. Don't tell me that we need 6.5 trillion of federal government money spent. We just don't. The Pentagon is trillions of dollars underwater from the capital that's been given over the years that I can't even find. Like, we are a corrupt society. The beating heart of national corruption is Washington, D.C. And if we took a flamethrower to the place and started over, we'd be just fine. The U.S. is still an incredibly rich country. It just needs to get its act together, and it has the management capabilities to do that. And so, yeah, I think people who are waiting for the dollar to collapse. And look, I'm in the clicks business like everybody else, and I understand. I go on a podcast, and sometimes the podcast host puts an outrageous title that I didn't even say on the thumbnail to get people to click on it. I understand that. But there's also a point where you can't mislead people either. And we always try to walk the line between highlighting risk, a little bit of doom scrolling, but the occasional, this isn't as bad as people are saying. And the response of the piece was very reminiscent of the piece we wrote last year. We try to do this about once a year, called Peak Cheap Oil is a Myth. And I think everything we wrote on that piece has proven to be true in the intervening period. And so that was another one of those where maybe it's a bit different than what our traditional reader might be interested in learning about, but at the same time, we got a lot of positive feedback too.
Well, you mentioned revaluing gold, and there's been a lot of interesting news coming out of the gold sector. First of all, that revaluation, I'd love to get your thoughts there. Let's start there. Practically, how could they do it? And is there a downside risk? I've heard some people say that could tank the US dollar. What could be the negative side of potentially revaluing America's gold reserves?
When people talk about tanking the US dollar, they're usually talking about the DXY, which is a comparison of the US dollar basically to the euro, the yen, and the pound. Last I checked, those countries own gold too. And so really the question we have is who gets hurt in a revaluation? Yes, all of us gold bugs and who have invested so much in gold over the years, or as I'd like to say, saved some of our wealth in the form of gold holdings over the years, because I don't view gold as an investment. I view it as a hedge against currency debasement. We would come out relatively well compared to our peers. But if the U.S. Treasury announced tomorrow that they're going to mark their gold to market, gold prices would skyrocket, because that would effectively announce a return of the gold standard. I mean, one way or the other, one form or another, gold would reemerge. I argue it never really left in its central role as a neutral reserve asset for settling imbalances in international trade. And I noted with interest an important cultural moment yesterday. Our good friend, I'm friendly enough with Luke Gromen on the Tucker Carlson show. I don't know if you saw that. An hour and a half of Luke, who I'm sure you know and have had on your show, talking with Tucker Carlson, millions of people watching. I mean, Tucker Carlson, whatever you think of the man, he has created a powerful media empire. It's getting to be on par with the Joe Rogan podcast. And for Luke Gromen to get 90 minutes in front of Tucker to talk about gold, I think is wildly important. And I sent him a text this morning congratulating him, and hopefully it did wonders for his business. I'm sure it did. Millions of views never hurt, as you know. And so I think, if the Treasury just announced it's going to mark to market, by the way, the Treasury could come out and say, we're revaluing our gold to $10,000 an ounce. They could pick any price they want. And what do you think the market's reaction to that would be? I don't think the price of gold would go down, at least not measured in dollars. And I don't think that would disproportionately impact the dollar versus the euro or the yen or the pound. So I don't know who really gets hurt in such a circumstance. I'm sure there's some unintended consequence that you and I can't conceive of. But, I'd love to see it because I think gold is the ideal neutral reserve asset.
Absolutely. I agree with you there. I'm wondering what your thoughts are on the Fort Knox audit, the potential audit of Fort Knox. I believe when Trump was sitting with Macron doing his press thing, he actually mentioned perhaps the gold could be stolen. He threw out some sort of comment like that. I wonder, do you think a full audit's actually going to happen? I think some people have alluded to that it actually has been audited, but hasn't officially been reported. What are your thoughts on this whole debacle? Do you think the gold is actually there? Do you think we'll ever get to the bottom of it?
I don't know, is my honest answer. I've been reading a good friend of mine's new Substack, which is great. Alyosha, or his Substack is called Market Vibes. Sir JJ is what we call him. He's a 50-year veteran of trading gold and oil in the, back when you traded stuff like that in the pits. And he wrote a fascinating piece of Sunday evening talking about this whole gold situation. And he made some pretty interesting observations that only a decades-long market veteran could make. There were several times during his trading career where it could only have been the U.S. government intervening in the markets and driving the price of gold down. And he openly speculated whether, at least in two of those instances, it was Janet Yellen, former Treasury Secretary, former central banker, head of the Fed, whether she wasn't selling the U.S. gold into the market to keep the price of gold down. And he wonders openly whether the gold is there. I don't know if it's there or not. I do know, and through reading JJ, again, Market Vibes, I want to give credit where credit is due. It would be actually pretty hard to do. There's hundreds of thousands of bars. You have to assay them all. Counterfeiting gold is not like incredibly challenging, but still requires manual work to detect. So I suppose you could do a random audit. But what audit would actually satisfy people is another question. I'm very puzzled by Trump's statements. Who knows what he knows? He's often written off as a bit of a loose cannon, but he's also pretty strategic in what he says and when he says it. And I think underestimating him has always been a mistake. Whatever your views on the man are, I think underestimating him, you would have to agree, has been a terrible mistake for his political enemies to make. So I don't know what he's doing. There's an awful lot of gold talk. It's into the popular zeitgeist in a way that we haven't seen, so much so that one wonders whether we might be near a top.
Interesting thoughts. And I want to discuss the gold mining sector for a moment here and get your thoughts there, because as gold continues to climb, knocking on the door of $3,000, the gold mining stocks are nowhere near keeping pace, at least if you speak to the vast majority of analysts in that space. Even the majors, your Barricks, your Newmonts, nowhere near their all-time highs, and they're printing very excellent cash flows at the moment, particularly with the price of gold where it is today. I wonder why you think there is that divergence. Do you think there's a divergence? Do you think the mining stocks are fairly valued? And if not, what would you think it would take to close that gap?
I think they're undervalued, and I think they can become more undervalued over time. Investors hate the gold mining sector for some reason. I think I know the reason. The primary reason is because gold mining companies are led by bad executives, and they have not been good shepherds of shareholder capital. They've burned Wall Street in the past, and I think investors are on strike. And so if you think gold in the ground is worth more than refined gold at these prices, and especially with diesel prices under very good control, you would think that gold miners would be doing quite well right now. They're just not. They're not being rewarded by the market. Some would say, okay, that's value. Others would say that's a value trap. I noted with interest another content creator and good friend of mine, Tony Greer, was out with a provocative tweet this morning. This is what he said. I'll read it because I just pulled it up. I'd add that gold miner bulls are wired to never sell. They're still in the complaining about underperformance phase. Next, the bag holder phase. And so, just because something is cheap doesn't mean it can't get cheaper. In my view, the best way to own a gold mining company is privately and collect the dividends, because the stock market is not rewarding you.
And speaking of things that many think are undervalued at the moment, it's been a weary journey for investors in the uranium sector as of late. Stocks continuously taking a beating recently. Uranium X filled with the cries of lamenting speculators as they declare the uranium thesis dead. And many of these people actually have uranium in their Twitter handle name, which makes it all the more interesting, I guess. But behind all of this, it seems like the fundamentals for uranium and nuclear energy continue to look incredible. I wonder what your take is here.
There's a guy whose last name I forget, the Uranium Insider, Justin. I'm not sure.
Justin Hune, yeah.
Yeah, it's Justin Hune, great guy. And he and I were on a podcast together shortly after uranium hit what I referred to in that podcast as a potential Icarus print. I think it was $107 or $110. And I cautioned that, Icarus prints tend to mark a sort of top. And it was very, very frothy. And I didn't call the top exactly. But that was the time, I think, to consolidate, take a little risk off. The thing about uranium is it's not actually the product that is, mostly at least, not the product that is used in the nuclear reactor. It has to be refined. And so you could think of the fuel that goes into the nuclear reactor like gasoline that comes out of a refiner, but the uranium that we all can trade is really the crude. And so if there's a glut of the crude, that doesn't mean that, there's an extra step in there, and the Russians are involved in that. And so, for example, if it's becoming difficult to get enriched uranium, that creates a glut of unenriched uranium waiting around to be enriched. The people who buy uranium, aside from speculators, are people that enrich uranium. And so there's all kinds of complexities. But I think it had a good run. Look, I mean, if you are a member of Uranium Twitter, and for 8 years you were lamenting that it was between $20 and $30 a pound, and you got an Icarus print at 110, it's not going to 1,000. I mean, it's like the silver guys. I love watching silver Twitter. The gold silver ratio. Like these things, these legacy ratios, and unless you're like in the energy space where BTU arbitrage is real, like these gold silver arbitrage is very arbitrary. And so I have no particular strong feeling either way on uranium. Bullish or bearish is probably pretty fairly priced at these levels.
I'd love to pull on that thread regarding silver then as well, because I see all the same thing all the time. Obviously, whenever I talk to anybody regarding silver on this show and make it a focus, the comments are just filled with angry silver stackers saying silver's useless. It hasn't done anything. It actually has outperformed gold if we go back to February of 2024 to February this year over that. I know that's maybe cherry picking data, but it has outperformed gold on a percentage basis over that period of time. And it's not doing poorly, but for some reason, everybody wants to see $50 silver, $100 silver. These numbers just get thrown out there. Do you think silver is fairly priced right now?
I mean, who am I to question the market? Look, I got nothing against silver. Don't attack me in the comments. I happen to own a couple of hundred silver eagles, in my safe. I've stacked a little silver myself. You never know. Grid goes down and people will think silver is way more valuable than it is, and I'm happy to buy some bread with an eagle or two. That said, silver is becoming less of a monetary metal and more of an industrial one. Can I introduce you to platinum? Same story. And so it ebbs and flows with the whims of the solar market. And I think the election of Trump is bearish for solar, all things being equal. And so that's probably what's going on. If I were looking to hedge currency risk, I would just go buy gold because gold is still a monetary metal. And so silver is an interesting case. And by the way, like to buy a lot of it physically to store it, you run out of room pretty quick. I mean, it's 1/100th the price of gold, basically. So you need that much more room to store it. Whereas with, a couple of hundred gold eagles in a shoebox, you can move $1 million around. And so it's just not something I spend a lot of time paying attention to. I do enjoy the laments of people. It is a fascinating thing to get so focused on one particular investment that it becomes part of a community. And we see that with uranium. Lord knows we see that with Bitcoin. We see that with gold. Although with gold, I think a lot of people are otherwise successful in their lives and just trying to maintain some of that wealth, to hedge it across generations, so to speak. But these single focused communities like AMC, for example. This is one that I'm really baffled about. It's very clear what's going on there, and it becomes part of their social lives, their friend circles. People are moving online, and like-minded people are fun to hang out with online. I hang out with plenty of them, and silver is just one of those markets. And so you can't really have a logical conversation with some of those people. So yeah, it's fascinating to watch. I quite enjoy it. Again, I have nothing but respect for such people. Knock yourselves out.
Yeah, these tribal communities, it's a sense of camaraderie somehow. The ups and downs in the chosen asset category seem to bring everybody together, I guess. It's something like that. It is interesting to watch. I want to talk about natural gas for a moment. I had Josh Young on the show recently. He was very bullish on natural gas, not because of the whole AI data center demand potential, which is maybe a little bit farther out, but the more immediate build out of LNG export terminals in the US and the large arbitrage available in European natural gas prices. Eventually, he thinks those will push up prices in the US as well. So he's bullish on the natural gas sector as a whole. I wonder if you're seeing the same developments. I believe you wrote a piece about that. We discussed it a little bit last time I had you on the show too. How are you currently viewing the natural gas markets? What are the catalysts you're watching?
Yeah, we wrote a piece back in April called Generational Arbitrage, where we made much of the same arguments as Josh, and we read Josh's work and respect his work. And we were similarly long natural gas at $1.50 a million BTU. It's now above $4, at least on the front month, and I think strip pricing is $4.50. I think, depending on when you check it. At those price levels, natural gas producers, dry gas producers in particular, like where you're not co-producing much oil or natural gas liquids, they can earn their cost of capital and then some. I think the break-even price is around $2.50 now. That's how the technology has evolved. And by the way, that's an energy equivalent price. $4 a million BTU is an energy equivalent price of about $22 a barrel WTI. So it's still very cheap at these levels. I think Josh is correct that LNG build out is real and coming. And I would say any incremental wedge from AI only helps. The only caution is there's a monster of supply waiting to come back on. I mean, the Permian is co-producing gas, is becoming more gassy. Production was curtailed last year. A combination of relatively decent supplier discipline and a much colder winter, both here and in Europe, has helped the natural gas story immensely. It's still a gamble on the weather. The whims of Gaia can kill, it's called the devil's trade for a reason. And so I would just express caution up here. We were bullish at $1.50, and we came out with a separate call where we think actually the ratio of oil to gas could even get to energy parity. That's through a combination of gas coming down and of oil coming down and gas converging up a little bit. But I think, in our view, the equilibrium price that makes the world economy work is landed LNG at $10 a million BTU. That gives you $4 for the gas drillers in the US and $6 for the supply chain in between, Texas and Europe. And that puts the equilibrium price of oil at around $60 a barrel, which is, I think, where we're headed, especially if peace breaks out in Ukraine and the Middle East. And so at these levels, unlike gold drillers, natural gas drilling stocks will make significant money and do quite well. And, the EQTs of the world, led by the Rice family, they know one thing they know how to do is make money. So it's an interesting play. It's an interesting call. I think it's a better call 65% ago, but it's not exactly. At $4 a million BTU, you're getting to a level where it's going to be very hard for producers to continue to express discipline because they can make significant money by turning the taps back on.
Well, Doomberg, this has been a fantastic conversation. Thank you so much for coming back on the show. Tell us about the Doomberg Substack and where people can find it.
Yeah, we're at Doomberg.com. You can find everything there. We write 7 to 9 articles a month for our annual subscribers. And then our Pro Tier subscribers, in addition to those articles, get a webinar once a month. We just did one on natural gas liquids, which was well received. The prior month was on the natural gas situation between Russia and Europe, as I alluded to. So all of that pricing information is available at Doomberg.com, our pro tier content, and in fact, all of our appearances on shows like yours are listed under our Doomcast webpage as well. So Jesse, always great to talk to you. Looking forward to coming back next time.
And thank you for joining us today. This episode is brought to you by ARC, silver, gold, osmium for all your precious metals needs. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.